and I'm going to be taking you guys through today's tutorial. So we have a long session ahead of us. So I hope you guys then went through the question and also, just tried to attempt it, because it's very much important that, you do it before our tutorial, so that you then are able to fill all those gaps that you have. And then if you have any technical issues, then we can then sit down and then we can address it. So in terms of CTA, maybe before we start, just two things from my side in terms of advice. I think the first thing you need to be proactive. And what do I mean by being proactive? It means that if you have a lecture, if you have a class, and if you have a tutorial, you need to make sure that you go through the content before you go to the class, right? Because each and every hour counts when you're doing CTA, and I'm sure most of you guys also are working. So you want the tutorial or the class to be very much productive, and you do that by making sure that you go through the content before the class, and also go through the question before the class, so that when we now start discussing, you then see where you need to improve, and then you also see where you did well. So it's very much important to then be proactive. And then the second thing, it's with regards to feedback. So feedback is very much important, right? So if you want to master anything, even in life, you need to make sure that you do proper feedback, right? So for example, if you want to be better in presenting, you need to then sit down and then also go through a presentation to see where you are going wrong, what you need to improve, and also where everything is fine, and then you need to keep the strong points. So it's very much important that you do feedback, and feedback has, you have different categories of feedback as well. So the first thing is the technical part of things. So if you're saying I wrote an exam, or I wrote a tutorial, or I wrote a question, and then I have my results, and you now want to do your feedback, the first thing that you need to look at is the technical aspect of things, right? So what do I mean by that? So say you're doing a valuation question, and this depreciation, you know that depreciation is not a cash flow, and you have included it in your cash flow evaluation or in your capital budgeting, you then know that it means that I'm not really understanding this principle. So I'm having a technical issue, meaning that I need to then sit down and make sure that I then get the principle. So that's one aspect to it. But then also there's another aspect to it, which is exam technique. So, most of the time when I talk to the students, they will tell me that, when they see the solution, all those things came back. So they knew them, right, after seeing the solution. But when they were writing the exam, they couldn't then put down those principles and those technical issues. But when they go through the solution, they then see that, oh, but I know this principle, but I've studied this principle. This means that then that's the second aspect of feedback, which is then the exam technique. So it means that you then need to make sure that you also get your exam technique right. So when you're doing feedback, one, you have to then check on the technical aspect of things. Did I get the technical right? And then if then that's a tick, you then go to the exam technique, right? And then also the exam technique is also divided into different categories. So if I'm engaging with the student and then I ask them why they didn't do well in a test, and then they tell me that they didn't have good exam technique, I still go further to say, what do you mean by you didn't have good exam technique? So you then need to also break that down, right? To say, okay, one, did I have issues with time management? Meaning that I couldn't then get to all the questions that are there, right? Because you need to address all the required, because there's always, and I always say that there's always easy marks in each and every required. So you then need to then touch on every required, right? So if you then don't go and do or attempt all the required, it means that your time management, you need to then improve on that, right? So you then need to then see or pinpoint that when you're then doing your feedback. The second thing will then be the planning, which is very much important. And then we're going to touch on it here now when we're doing this, this tutorial question. So if you don't plan your questions, and then if you don't have a structure, it's very much difficult for you to pass the question. And this sometimes is not because you don't know the technical aspect of things, but it's because your exam technique, being the planning, it's very much poor. So you then need to make sure that you plan. And by planning, it means that if I'm reading the required, I need to already see the solution that I need to put down, right? I need to already have the structure to say, I'm here now, and then I want to get to the end point. And then this is the structure of the end point, and this is where I want to see myself. So you need to have that in mind. So this means that when you go back to the scenario, you already know what you're looking for. This is what I'm looking for. Okay, this is coming here to my structure, because then you're planning, you have your planning right. However, if you don't have the planning right, then it means that you're just going to be all over the paper. And when it comes to CTA, you know that the scenarios are very long, and you need to then integrate the information that you are reading, moving from one point to another. So if you don't have a plan, then it means that you'll end up being all over the paper, which then it means that you won't be able to get it right. Maybe if I can ask you to just mute. All right. Yeah. So the planning also is very much important. So it means that when you are going through your feedback, you then need to pinpoint to say, is it time management? Is it planning? Then the third thing will then be just understanding the required. So if you miss the required, and that's the starting point, right? So you need to give yourself time to be and to understand the required. So don't rush to go and answer and start answering the question without really understanding the required. Because if you don't understand the required, it means that you're just going on a tangent, and you're not really answering what is required of you. And then doing that, it means you get to miss easy marks when you are answering, because the reality of things is that most of the answers are in that question that you're going to be doing. And you'll see today when you go through the tutorial to say most of the things are there. So it's just a matter of having that exam technique to say, how then do I make sure that I utilize and I get all these marks? So you then need to understand the required. And then by understanding the required, you then have a proper plan to say, okay, this is what I'm required. And then this is then my plan. Then the other thing relating to exam technique will then be reading and understanding, comprehending, right? So comprehension and reading the scenario critical. So that's a skill as well. And then that can be the difference between you passing the exam and also not passing the exam. Because when you read, you then need to be critical reading, right? So don't just read like you're reading a magazine or a newspaper without really thinking about things and in a critical way, right? So read and then, take a pause and then try to think about the information that you have just read. What does it mean, right? So if they're giving me then numbers, if they're giving me the production units, what does it mean? And then that's when you start also connecting information to say, oh, okay, so these are the production units. And then I just read this, it means these two are related. So reading as well to understand the scenario, it's very much important. So I want you guys to say, in each and every test that you write, in each and every tutorial that you do, when you get those marks, don't just then put the paper away and not do this feedback. So I need you to then sit down and then try to identify, to say, what is then the issue that I need to then improve on, right? Rather than just using a blanket white approach to say, okay, let me go to the solution, let me go to the question, and then let me see, and then like oh, okay, so it means this and this, but without really understanding to say where my issue is, right? So you then need to do that, and then I guarantee you that if you then do feedback and then you then pinpoint and identify the areas of improvement, you're really going to then do well. So I think that was just the advice that I wanted to give you. I mean, going forward, to say that firstly, be proactive, meaning that you need to attempt everything before you even go to the class, so that you can then get the maximum benefit of the class. And then also the second thing then will then be your feedback to say, make sure that you then do feedback, and then also by doing feedback, pinpoint it to say, where is my area of improvement? And then, yeah, I think once you do that, then everything will then be fine. All right, I think you guys, any questions on what I've just said before we get into the question? Happiness. All right. So I'm going to switch off my camera now, and I'm going to then share the question. So yeah, you guys, how did you then find the question? Maybe let's get a bit of feedback from you guys. What were the areas of struggle? What did you struggle with? What was the issue? Did you understand the required? So maybe let me just, firstly get some feedback from you guys. How did you find the question? Anyone wants to go for it? Guys, don't tell me you didn't go through the question.
Hello, sir. Hello?
Sorry. Yes, I can hear you.
Okay. Actually, the question was just okay.
Just okay.
But I did not. The one which I hated the most was question B. Because I felt like it was so much based on business in distress. Like I had to have a business rescue technique. So I was like, how I did not see how it was related to strategy at the point of what based on the theory that I've gone through and maybe how I've missed it. And then A, it was just fine. And then C, I feel like C, I've concentrated, but I feel like there's some marks that I might need more if after we go through the paper, that I'll see what I've missed. But B was the most chaotic one for me.
Yeah. And yeah, I think you're spot on there. B, I think a lot of answers were there already. So even though you didn't really understand how business distress works and business rescue and all those things, a lot of things you could have then picked them up, right? Again, if you have the right exam technique, right? And it comes back again to the exam technique. So if you have the right exam technique, if you are able to read critically, if you are able to break down the scenario that you are given, you will see that you can then generate a lot of points, because a lot of people then will say, especially with strategy questions, they don't know how to generate more points. So you'll get a 20-mark question on strategy, and then you only have 10 things. And then now you're stuck. And then the answer and all the solution is there. So it's just a matter of, do I have the right technique? Do I have the critical thinking to then make sure that I then get generate more points? I see a hand, Piwa.
For me, hello, sir. I think for me, I struggled with the length of the scenario. I think there was a lot of information, and I was not sure which information is really relevant to my required. So, yeah, but I think I figured it out, but it was quite a challenge for me.
Yeah, and then yeah, true. I think there was a lot of information there relating to valuations. From the statement of profit or loss, so we didn't really need some of the information that was there. But again, it's a skill, right? Because especially when you also do integration and you now have 3 modules that have been tested, you'll then get a lot of information. So you then have to have the skill to say, even if I'm reading, where must I go to then get this information that is then needed? And then it comes back again to exam technique, and this word you'll then be hearing it all over and all over tonight, because everything comes back again to exam technique, to say that All right, this is the information. I have a lot of information. This is what my required is saying. Am I understanding my required? What is my plan when it comes to my required? Do I have a proper plan? The plan then should tell you to say, this is the information that I need. So I have done my plan, so I need this information. Therefore, I can then go to the scenario, and then when I'm reading to say, this is relevant, this is not relevant. And then that's one exam technique that you then need to start learning about. But I agree with you. There was some information that were relating to, I think, valuations, and it was not tested here. Sandy, go for it.
Afternoon, sir.
Afternoon.
I'm sorry for taking you back. It's actually my first day today, so I'm kind of really, really lost. I'm not sure if anyone is able to share the question for me so that at least I can follow through, and then I'll say my comments thereafter. So I'm not going to be much more interactive. I'm sorry, guys, for taking you back.
Okay, no problem. I think the team is here. So if maybe you can then assist Sandy there in terms of getting the link and the questions, because I think you're still going to have some sections, some tutorial sessions as well. So all the questions are there. So maybe if the Endonamo team can assist.
Thank you so much. I'm sorry, guys, for taking you back.
No worries. Anyone else? Anyone else with issues that they identified, so that we can, touch on all those issues. So one, there was an issue relating to part B, in terms of saying that if we didn't have that business distress head, then it was very much difficult to sort of like maneuver through the question. And again, the other point of the question being long and some information not being relevant. Anyone else? All right. So if there's no one, let me then share. And you guys, you will just then confirm when you can see my screen. Someone can confirm if they can see my screen?
Yes, we can. All
right. Happy. And you guys can stop me at any given time, right? So now I'm sharing, meaning I can't see people who are raising their hands. So you can then just open the mic and let's engage. So yeah, strategy. I randomly had a session with you guys yesterday, and then you were discussing some of the modules that you can use, right? Your your SWOT analysis, your Porter, and all of those, right? So those are some of the strategies that you can then use, especially when it comes to discussion questions. And it's because most of them will revolve around those things, right? So if we're talking about the 6 capital, most of them are going to be talking to the 6 capital. So it's just a matter of them being able to then identify from the scenario to say that, okay, this then is the point that I then need to use. This is relating to maybe a new product that is coming, which can be a threat to my existing product that I have as a company. So you can then use those as well in terms of generating points. And then you will see here, as we then discuss the question, we will also be linking it to some of those methods that you can then use, right? To say, okay, this point then is relating to human capital, for example. So then those are some of the things that you can then use to generate the points. However, again, it comes back to exam technique, because you might have those, right? But if you then are not able to understand the scenario, to understand the required, to understand what you then need to do, you find that you just have them, and then now you just try forcing points on those strategies. So again, those ones are very much helpful, but you then need to come back and you need to then understand what you are then dealing with, and then really apply it based on the scenario. And like what I said, what I like more about strategic questions is that most of the answers, 80% are already there. It's just a matter of then finding them. Another strategy that you can use is that if you identify a point, so if you're in an exam, right? So this is one exam technique that I'm giving you guys. So if you're in an exam And then they ask you, for example, for 5 points, and then you then write, or 10 points, you write 5 points, and then you can't think of any other points. So like you went through the paper, you went through the scenario again, you can't think about 5 more points. What I want you guys to do, I want you guys to go to the points that you wrote. So go to the points that you wrote and ask yourself to say, if this happens, what will then be, what will be the consequences of something like this happening, right? So go to the points that you wrote to say, okay, I have 5, I can think of 5 more. So let me then go through all these points. So if this happens, for example, if I fire my employees, what's going to happen? And then just try to think of that point to say, okay, if I fire them, obviously they might take me to CCMA. Obviously, there might be strikes. Obviously, if it's a lot of people that are fired, the community might not be happy with that as well. That will then affect then the profitability of the company, because if we don't have the customers who want to buy our service or our products that we are selling, it means that will affect then the profitability, right? What about the remaining employees? So from one point, you can then generate more points as well. So don't try to limit yourself, because when we are marking, that's what we see. A lot of candidates they limit themselves when they're putting down when they're putting down the points, right? And then I'm like, if you then just go to the point that you just put down, and then you try to then think about it, try to think about the consequences that are gonna come there. You can see that you can generate more 2 or 3 points from the point that you have then put down. So that's just another exam technique that you can then use when you are in an exam and you don't know what to then put down. I remember there was an accounting question as well. We asked the candidates to review an accounting policy, and then in that accounting policy, it was PPE, and then we had cost, and then we didn't give the depreciation rates. So you then needed to think to say, it means that one, I won't be able to calculate the depreciation. So if I'm not being able to calculate the depreciation, what else can happen? So it means that I can't do assessment of useful life, right? So now I'm thinking those things were not evident on the question that was given, but now I'm taking a step back to say, if I can't calculate depreciation, what does that mean? It means I can't do the carrying amount. It means I can't do impairment, right? Because now I won't have the carrying amount, right? It means I can't do then I can't do assessment of useful life, because then I don't have then the carrying amount, the depreciation rate. So it's this expanding on the point that is there, and you try to expand by all means to say, how then can I generate more points from this one point that I have? So if you then do that and think about it, you'll see that you'll be surprised how many more points you can think of. All right, then let's get to it. I'm going to start with my required, right? So you're going to read, reading time, read, and then you come to the required. So I want to spend a bit of time here, because one thing that I've seen is that people don't spend time on the required, and then they don't have a plan, and then they don't understand the required. Then when they go back to this information, they're all over now, because they don't really have a plan in terms of how to tackle the required. So I want to then spend time on the required and just show you how you can also break it down and then plan before you even go to then answer the question, right? So let's then start with the first one, which is required A. So we are told to prepare a memorandum, right? So prepare, you have to do something. A memorandum, that's one mark there. You'll be surprised how many students will then just put things without then the format of the memorandum. And then these are free marks, guys. And then in this, like doing CTA, you need to make sure that you get all the free marks. Like there are marks that are there for the taking. And if you then don't get them, it is very hard to pass, right? Because now you'll be forced to then go and do technical things, or else there are free marks that are available to you. So one, I have to do a memorandum. It means that already my layout and structure, I have one, right? Without even thinking about everything, without even going to the required, just to then prepare a memorandum to say, okay, I'm preparing a memorandum to Kemen. All right, so we preparing this memorandum, which is the first point, in which you describe the current business and financial risk. So two things, business risks, and then I also need to then do financial risk, right? So two things. So what is a financial risk? So a financial risk is now the risk that this company is unable to then meet its finances and obligation. So it means that if there's any risk that is then going to make me not to meet my financial obligations, not to meet my the amount of debt that I need to pay, the loans that I need to pay, the interest that I need to then pay, then that is then a financial risk. So you then need to understand and to know what is the financial risk. So that's one thing that I'm asked to describe here. Then the second thing will then be business risks, right? So business risks is the ability of a company to not meet its business activity, right? Or its operation. So anything that is going to cause me not to do business, right? Anything that's going to then stop me to do the activities that I do each and every day. That is then a business risk, right? So financial risk also falls under business risks, because if sometimes I'm having financial issues, it means that I might then be unable to operate as a company, right? But then there are other business risks that falls under here, right? So then your operational risk. So I then need to then have any risk that is going to threaten my operations. So if it means that I'm selling, I'm selling, for example, say I'm selling cheese, or I'm selling eggs. Like recently there was an egg outbreak, the disease, and it affected the eggs and all those things. So it means that even though my eggs were fine, right, and then the disease came after, it means that now, because there's this perception from people to say that there's issues when it comes to eggs, then that then affects me selling those eggs. So then that's a risk. Although this happened after everything, right? And I've already had then this stock in my shelf, then it's still an operation risk. So there's then operation risks, things that has to do with your reputation as well, because I mean, if you then have this bad reputation, it means that it can affect the perspective or the perception of customers, how they see you, and then they might not then come and buy your product, meaning it will affect then your business activity, right? That's something that I'm thinking about as well. Then the strategic risk. So as a company, you have strategy. So you'll say that we want to do this. So when I introduce a new product, or this is our strategy now, we're going to have a new product. And then again, the risk that then affects you then being able to then sell off that new product. So that it's affecting also then the strategy that you're saying you want to implement. So that also then will then fall under this, right? Environmental. So sometimes, and then you see that some of these things also links and connect to those frameworks that Renan was giving you yesterday again. Because I mean, from environmental, we then need to oblige, or we need to then follow the rules, right? So sometimes then it might lead to closure if we're not following some of the legislations that are there, right? If then now there's ECGs and all those things, if we're then not following as a company, then that can also affect then the activities. And now with JSA, they've introduced a standard that deals with then the ECGs. So it means that that becomes then the risk of us not operating. Then with the compliance as well. So compliance, the legislations that are there, and then these are just then the risks that will then affect. They will then affect your. They will then affect. Where is this thing not going down? They'll then affect your operations as a company. So it means that I then need to identify those risks, and I also need to identify financial risks. And financial risks, I've said that this is now the ability of me not meeting my finances and not meeting my obligations. So 3 things: I prepare a memorandum, I then have my current business risks, I have my financial risks, and then they're saying that I need to prepare this or describe, you describe these risks that are facing Eurofix that may be used by the directors of chairman to influence negotiations regarding a potential increase in its existing holding in Eurofix. And then we are told that calculations are not required, so you don't have to do any calculations. So I expect you guys now to then have one. To then have one, a memorandum that is there. 2, and headings to say business risks, or you can then have financial risks. So how does this help? This helps to say that I know that when I then go back to the scenario, firstly, I need to then have this format, and I then need to then address the business risks. And already I've broken down them to say, oh, these are the operations, these are the reputation, these are the strategic, these are the environmental, and these are the compliance. And all of them are in the scenario. So also using those capitals, right? If I'm thinking about the human capital, I'm saying that I then need to have skilled employees in my business, because if I don't have those and my business requires employees, then it means that will then affect the operations as well, right? So you then need to then make sure that you categorize, everything, and then it then becomes easier for you to say, okay, this is then what I then need to do. So if you then have this as a structure, you're breaking it down, you know that if I'm going back and I see something relating to valuations that does not really affect or that doesn't really have an impact on the operations of the company, it then means that it does not need to be here. So here I then just focus on then what I'm then required to do. So that's the first thing.
Sorry, sir, can I disturb you a bit?
Sure.
Yes, with regards to, good evening first. With regards to the verbs that are used like in a question, especially for management accounting, maybe throughout the session or just somewhere, maybe at the end, rather, could you maybe explain to us what exactly are we expected to do with regards to those verbs? Because I understand that describe for any other module might not really be the same as FBS management accounting would require the question, require you to answer the question. So at the end of the session, may you please kindly explain to us, like when they say discuss, when they say describe or evaluate, how far must we go with our answers?
All right. Sure, that's noted. So describe, discuss, evaluate, right? Happiness, describe is saying you want to then know when they say describe, when they say discuss, and then when they say evaluate.
Yes, please, yes.
All right. I'll touch on that. So, all right, so I'm gonna go to then the second one, right? Using then the same strategy. So the second one, I told you to make a recommendation. So that's the first thing. What is making a recommendation? Making a recommendation is that you need to conclude. So you need to have a conclusion here to say that I recommend that we do this and this and this and this. That's also an easy mark, because obviously we then have discussed, and here when we mark, we don't really there's no right or wrong answer, but then obviously it has to be in line with how you are discussing or how you are arguing your points. But if you then need to make a conclusion, so if you then do, and then you are discussing the two, or you are then checking the two, and then you then say at the end, I'm recommending this because of my discussion. We're still then gonna give you the mark. So here again is another free mark that you then need to do, and then you'll be surprised how many people don't conclude at the end. You know, here you are told to make a recommendation, meaning that you then need to, at the end of the day, you are discussing to the board, and you being a financial manager, for example, if you are then invited to a board meeting, they're then going to say, okay, discuss this, and then make a recommendation to the board. Can I please mute? Thanks. So yeah, so it means that you then need to recommend, and recommendation means that if you're invited to a board meeting, and then you have to then tell the two options, you recommend to the board, right? At the end of the day, it's for the board to implement, but then you then have to have an opinion, and then based on the facts that you are having, and then the two sides that you have looked at, right? So if there's an issue, I'm saying that I've looked at the positive sides of this issue, I've looked at the negative side of this issue, and then based on this discussion, this is what I recommend. So if then you are expected to go to the board, I don't expect you, if I have a strategy and you say I'm the chairperson of the board, and I say, as a company, this is our strategy that we want to implement. I don't expect you, and I ask you, please come make a presentation and recommend. I don't expect you to then come and tell me the negatives only, right? Because now, although you are recommending, but it's like now you've already sort of like picked the side in a way, right? So you then need to give me both sides to say, okay, I've looked at this issue, and then I've seen that these are some of the advantages of this strategy. These are some of the disadvantages of the strategy. And then based on these two issues that are here, and then these facts that I have, I recommend that we do this and this because of this, right? Because maybe the positive outweighs the negative. So you then need to look at it both sides, and the context here matters, because now this is then going to the board. So if it's going to the board, you then need to give them those reports to say, even if you're not there, they can say, oh, okay, I see how this guy got into this conclusion that he made. So I don't want then, when you have left, I'm calling you to say, but I thought about this, why didn't you consider it? So you then need to consider both sides, and you need to then consider everything. And then at the end, you then can recommend. So here we're told then recommend to the board. And what am I recommending and what am I addressing? I'm addressing two things. Firstly, I'm addressing the qualitative factors, and I'm also addressing the quantitative factors relevant to the two options, right? And the two options was either to restructure or liquidate, as described in section 4. And they then limited you to then section 4 here. So what does that mean? And how do I then expect to then see, how do that I expect to then see your planning? So firstly, I want to say that I have two options. So I have one option, which is to restructure. I have another option, which is to liquidate. I know I need to touch on both these things. What am I touching on? On restructuring, I need to then touch on the qualitative factors. I need to touch on the quantitative factors. Then for me to liquidate, I need to also touch again on the qualitative factors, and then also I then need to touch on the quantitative factors as well, right? And yeah, just yeah. So I then need to then touch on these two things. So already my solution is looking like this. I have two options, which one, I need to talk about restructure, and I need to talk about the qualitative side of things. I need to talk about the quantitative side of things, right? And then we say, if I'm making a recommendation, I then expect you to say, in terms of the qualitative, These are some of them positive factors, and these are some of cons in a way, right? That will then be there. So I expect you to then have a proper discussion because this is going to the board. So you then have to, one, touch on the restructuring. What am I touching on when I'm discussing restructuring? I'm touching on the qualitative, and the qualitative I'm going to discuss to say, okay, maybe this is the good thing about it, right? Or maybe this is it might be an issue when it comes to restructuring. Then I then come and then touch on the quantitative, right? Then I need to come here and discuss then for us to liquidate. What are then the qualitative? Again, both sides of the coins, right? What might be then the good thing and what might be some of the things that are cons. Then I go to the quantitative side of things. And then I make a recommendation because that's what I was asked to do. So now I have this structure. So I know that when I then go and read section 4, because now I was limited to section 4, and this is very much important. You then need to realize to say, I'm limited to section number 4. So section number 4, when I go there, I then need to be looking out to say, okay, let me start with then restructuring. What is then the qualitative factors? What will be some of the quantitative factors that I can talk about? Let me then go to liquidation. What is then the qualitative factors that I can talk about? Things to consider. If we're considering if it's both, pros or cons as well. What are then the quantitative factors that I need to then consider? And then I need to make a recommendation. So going or moving from this required, this is what I have in mind, right? So that's then the first side of things. The second side of things you will see when you go through the question is, again, like I said, exam technique, breaking down the information that you are given to so that it can then talk to the planning that you are having here. So you then need to also break it down. But I'm expecting to see this as a structure to say, okay, if I'm discussing more here, at least I will see that, oh, I still have to come and talk to this. I need to then come and talk to this. And again, I then need to recommend to make a recommendation or conclude, because this then again, it's an easy mark that I then need to get. So this is then how you then have to then break down this required. And again, here what's important is that firstly, section 4 is very much important because it means that you can go there and talk about it. And then you'll see when you're talking about when you go there, the restructuring was just one paragraph, right? One small paragraph. But in that small paragraph, you will see how many points we are going to come. We're going to come with the points there, because we're going to be breaking down that paragraph and trying to think critical about the paragraph and how we then go about it. But then the first thing is to make sure that your planning is right. And then when you are planning here, you're already seeing the solution. So I'm here reading my required, but already I'm seeing the solution. I pictured the solution to say, when I'm done with this question, this is what I want to see. This is where I want to then be. So if you then do that, it means that you know that I'm here, I have to get here to the end point. So then it's just a matter of saying, how then do I go about it to then get there? But I already know where I'm getting. So it becomes difficult if you're now doing the required and you don't really see where you are going. Because when you go back to the information, what are you going to be looking for? What are you going to be writing? Because already you don't see where you want to be. You don't see the final solution. But if you see the final solution, you then know that, okay, it's just a matter of saying, okay, I need to go here and here. And also it helps if you then get thrown off, right? So it happens when I'm reading, then I get a technical issue and then it throws me off. And I get that a lot from the candidates. Then they will say, it just threw me off. I couldn't concentrate anymore. I couldn't then, think, and I was just now all over. So what does the structure have assist with? It then helps you to say, if I get off, I go back to where I want to be. And then I'm like, okay, maybe this issue or this part is just giving me problems. Then let me leave it and let me continue with the other things because I know what I then need to put and where I need to be. So it means that you're not going to be all over, but then you're going to be, okay, maybe the quantitative side of restructuring is not really coming. So what must I do? Let me then move on to then the qualitative factors of liquidation and the quantitative factors of the liquidation. And then you move on. Then you still are in the journey to get to your final designation or your final place, right? So it then helps there to say, if you then get thrown off, you then find yourself being all over the question, and you have this structure that you then need to follow. All right. So we were told to exclude the discussion, very much important. Again, if you then discuss this, you're just wasting your time, and time, you understand, it's very much important here, right? We need to make sure that we save time, and we need to go to all the questions, right? Because in each and every question, there are easy marks. So they were told to then exclude this discussion, meaning that we're not going to be discussing about robots here. And then very much important, right? And I want you guys to then tell me here, and I'm going to stop for a bit and ask you this question. When they said ignore all text implication in your calculations, how did you read this? How did you read this? When they said ignore all text implications in your calculations, did you have any text implications at all in your solution? Anyone else go for it?
Hello, sir.
Oh, yeah.
Hello, sir.
Yes, I can hear you. Who am I speaking to?
You're speaking to Aisha.
Okay, Aisha, go for it.
I think the things to consider if you are liquidating would be the capital gains tax, as well as considering what will be the impact on if they are restructuring, if they are closing, then going concern, and if they are having VAT that they have to pay, if they are registered for VAT, then what would be those implications if they are selling their going concern?
All right. So the question, maybe if you can keep your mic open. So the question then is to say, did you consider those things when you're answering?
No, I didn't, because they said we must ignore them.
Okay. So you didn't consider them.
No.
Okay. Anyone? So
hi, sir.
Yes, who am I talking to?
You're speaking to Vielwa.
Okay, Vielwa, go for it.
I think as Aisha was speaking, I noticed she said that she ignored the tax implications completely, but I noticed here that it says in your calculations. So I think you could mention it as a qualitative factor to consider.
100%.
Yeah. Okay.
100%. And I agree with you completely. So guys, we are told to ignore tax implications in your calculations. And remember, we are doing two things. We are talking about the qualitatives. We are talking about the quantitatives. Quantitatives, it has to do with numbers and calculations. So they're saying tax implications, calculations, don't mind the tax. But now it means that in terms of qualitative, I can still mention it, right? Because that's the qualitative factor. And for example, we spoke about debt. So if we are then trying to restructure our debt and we waive the debt, you know that we then go to section like capital gain implications and section 19 and all those things in terms of us doing debt reduction or waiving the debt. So it means you can then still talk to those things because now we are bringing it as a qualitative factors rather than you including it in your calculations. So you then you were supposed to then bring it when you were talking about the qualitative factors, but then when you are now calculating or putting down the numbers, then you can ignore all the tax implications. Happiness, aligned. All right. So yeah, thanks, Vuyelwa. Then the last one. So the last one we are told to then discuss the key considerations that the directors of Eurofix should take into account when deciding to replace other employees with robots in financial year 2020. And then when you're reading there, you'll see that this has not yet been implemented, right? So if it has not yet been implemented, it means that if I'm then now thinking about key consideration, I'm then putting it again to the directors to say, guys, here are the advantages, here are the disadvantages. So you guys will then, I was not told to recommend in terms of what I need to do here, but I was just told to say, discuss to us. I'm giving you a task as a financial manager to say that this is the strategy that we want to do, we want to implement next year. These are some of the things that we're thinking about to then do next year. Please assist me with things that I need to think about, right? So please discuss and then assist me with things that I need to think about, the considerations that I need to think about when it comes to this. So you can't then be sort of like emotional here because of 200,000, 200 employees getting replaced, and then you forget to talk about some of the positive things that can come with replacing those employees, right? So obviously this again was sort of like an ethics part of things. So remember, ethics also are divided into your personal ethics, your business ethics, and also your relationship ethics. So this then had to talk to the business ethics side of things, right? To say, us then replacing 200 employees, that sounds like a lot, right? Is this decision, there's a dilemma in a way here when it comes to the ethics. But again, we then needed to discuss then the key things, the positive things as well as the negative things that are there. And then you leave it up to the directors to then make a decision to say, even if when they implement this strategy in financial year 2024, if something comes up, you need to have picked it up, right? So they must not be surprised in 2024 to say, hey, hold on, we didn't think about this. Why is it happening now? So you then need to say, okay, here are all the key considerations, so that even if it happens, or even if they go and do this, they know that we have considered everything. We have put everything into consideration, and we still then went with the decision that we have made. So you then need to look at both sides as well. And I'm emphasizing this because, you know, people, when they see 200 employees, you know, getting replaced, yes, you need to talk about all the disadvantages, but then you will see that if you run out of points and you didn't consider the positive, those positives were some of the things that we're going to assist in terms of getting more points and getting more marks. So you then needed to talk about, okay, what then is then the advantages as well of then replacing these people with these machines. So you then also need to talk to both sides. So it means that as a starting point, where am I seeing myself? So I'm seeing myself, then I have to discuss this consideration. And then one, I then need to talk about the issues or concerns that we need to consider, right? Or factors that we then, or let me just say concerns that we then need to consider. But again, if there's any positive that I need to discuss, then I also need to then put that down. So it means that if I'm reading and I see that this might be a positive thing, something that is positive, they spoke about savings, right? Remember, they're saying this decision will then talk to the profitability of the company. So it means that if we then don't do it, we might close. So that might be something positive to say, we don't have a choice. These are some of the key decisions that we need to take. And then we also see it in the industry where a lot of people get retrenched, right? Because at the end of the day, the company has to survive. So you then need to then talk on both issues, and then you then need to put both considerations, being the positive side and also being the negative side. Then we're going to give it this 1 mark. So if you then don't talk to both of them, then sometimes we don't then give out this 1 mark to say, yes, I see the points are very clear, but you then missed the other side of things, because now you are then telling management to say, no, don't do this because of this, this. And management that just need your inputs. They just need you to then tell them, say, okay, this is the bad things, this is the concerns, these are the positives that you then need to do. And then they can then discuss or decide to say, what are we then going to do? So you then needed to then know that you then need to talk about both of the considerations, both sides, and then you then need to discuss those sides. Happiness. Any questions? All right, then let's get to it, right? Let's start with number B. We are told to go to session 4, and then we can take a break, and then we can come back and then we finish the 2 A and C. All right. So here, what is my structure looking like? So I'm moving from here, going to session C. I know that I have to talk about the structuring, I need to talk about the qualitative, I need to talk about quantitative, and then I need to go to liquidation, talk about qualitative, talk about quantitative, and then I need to then do the recommendation. So we are then told to go to section 4. So let's then go to section 4. So maybe let me just then read the background of the company, and then we can then go to section 4. So we are told that Eurotile was established in 1993 when the Kunene brothers became aware of the success of Giovanni, the founder of Italtile, a company listed on the JSE. The brothers, Paul and Saul Kunene, identified an opportunity in the market to import ceramic tiles from the Eastern European countries, right? So they got this opportunity. So they're just telling us about the background of the company. Then they give us the group structure. We see that Eurotile, public company, listed, then controls Eurofix, and then also controls Europop, right? 75% here and 100%. So we are told that Paul and Saul still own 26% and 25% respectively of the shares of Eurotile. The remainder, because this is listed, it means that it's owned by a number of shareholders, none of whom individually owns more than a 10% equity stake. So that's fine. In 2001, after the decline in the value of the rand against major currency, Eurotile decided to manufacture its own range of tiles, right? So we decided to then do our own things now here. So remember, we then used to also import some of the things here. So through its diverse product offering, Eurotile is able to provide tiles to all levels of income earners. At the height of the construction boom in 2010, Eurotile established Eurofix Pty Ltd. Eurofix manufactures tile, adhesive. So that's what Eurofix, which is then a subsidiary of Eurotile. From the commencement of business, there was a problem with the quality. So again, if they just spoke about then the quality of what is manufactured and then they don't fix this, so this I then see it as a business risk, because if we are not producing quality, it means we run a risk of us losing customers. And then if we're losing customers, it means that this might affect our operations, and then it might affect our profitability, right? So then that becomes a problem, and then that needs to be addressed. So they were telling us that there's issues with the quality of then this adhesive that we are manufacturing. However, this was resolved, so I'm happy. No longer a business risk. So this was resolved when we sold 25% stake to this chemical engineering company. So we then sold 25%, hence we only own 75% here, and they own the 25%. Then we are then told to say that this company then came and then made changes to the formula, hence the quality is fine. And then we still own the 75% equity interest in Eurofix. That's still fine. All right, currently the group has 17 stores throughout South Africa. The imported and manufactured tiles and then the tiles adhesive are sold in these stores. All stores are leased from landlords. Eurotile is an online store, and then they talk about it also down there that sells tiles and related merchandise to wholesale and retail customers. Then Europrop, wholly owned subsidiary, 100% of Eurotile, owns the title deed of the factories and warehouses owned by the group. So all the properties are then sitting in Europrop, right? And then all manufacturing takes place near Vernachem in Gauteng. Then they also tell us about the auditors, right? So you will then see as we then go to workshop 3 and 4, we then start doing integration, and then we then bring that integrated thinking, because now we're going to put auditing, we're going to put all those things. So this is then an example to say that we can then also put an auditing task also coming from the same scenario. All right, so we've got the background. Let's then go to, and I'm going to come back to this information. Let's then go to section 4, right? Doing number 2. So section 4, and coming to reading this, so I'm done with my required, and then I know that I need to discuss the 2 options. And then I need to discuss the qualitative, the quantitative, and then I need to touch on both sides. So firstly, I'm told that the profitability of Eurofix has been declining over the past years. So again, here I'm thinking about those financial risks, right? To say that if the profitability is then declining, am I going to be able to then meet my obligations? So then if then that's the issue, then it becomes then one of the financial risks that I then need to then start thinking about, to say that, hold on, it means that we are not really making enough money to then pay off some of then the debts that we have. So, yeah, come in. Is someone asking something? All right. Then, so we are told that the CFO had put the matter of Eurofix on the agenda for discussion during the most recent meeting of the board of directors, right? So what are those options? So those are the 2 options that we're talking about. The first option is restructuring, which is this paragraph. The other is then the liquidation that is coming through. So it means that from this paragraph alone, I then have to then generate enough points for my qualitative factors of restructuring and also my quantitative factors of restructuring. So that brings us to the second point of exam technique, being able to then break down the required and being able to then read critically in terms of understanding what I'm being asked. So restructuring, Eurofix. So by immediately selling non-core assets, right? So one, I'm going to then immediately sell non-core assets. I pause, I take a break here, right? And I pause. And I'm like, okay, I'm selling non-core assets. What are the advantages? And what are the disadvantages? What are the things that I need to then consider before I then do this, or when I do this? What can then be the result of me doing this? How is that going to affect everything? So that's the first point where I then need to sit here and then I need to first think about it, right? Before I put anything down, I then need to say, okay, we are restructuring. There's different forms of restructuring, right? You can do a lot of things, right? You can play around it. So the first thing that we're going to do, and we're gonna, they use the word immediately, meaning we're going to sell immediately. So that's their plan, to say immediately. It means as a matter of urgency. It means like literally now we need to then sell this, right? So now I'm thinking that we need to then sell this non-core asset immediately. So it means that I'm thinking that, okay, the board, you have everything covered. It means you already have the buyer. It means that you have already negotiated. It means that you have everything figured out, because you are then taking a resolution to say we need to then sell this immediately, right? And what are we selling? We're selling our non-core assets. So when I'm sitting here, I'm thinking that I then need to talk about this, right? And I need to generate points to say what does it mean, and how is it going to impact then the company. That's the first thing. Then in Eurofix, and so we are selling the non-core assets in Eurofix. So again, non-core assets, it means they're core assets, and it means they're non-core assets. I then need to then know which ones are those non-core assets that we're talking about, which ones are the core assets that we're talking about. So I then need to have this, because I'm being told to say the assets, I'm not just selling all the assets that I have, but I'm only selling the non-core assets. So I then need to then be able to then distinguish between which ones are core assets and which ones are non-core assets. Then I'm then told that that's the first thing that we need to do. Then the second thing is then restructuring its debt. That's the second thing. The third thing is restructuring its equity. So what do we do? So I'm here. So I know I have to sell this immediately. I need to then talk about non-core asset. What are the value of this non-core asset? Are they going to solve my problems? Like, what's going to happen, right? So I'm here. I'm thinking about these things as I go. But I'm then noting that I then need to talk about these things. Then I'm being told to say, and then the second thing will then be restructuring its debt. I then stop there. What does it mean when we say we are restructuring debt? Anyone else go for it? Or what are some of the things that we do, or what are the things that you can then consider when you say you are restructuring debt? So I have debt that I need to pay, and now I'm saying I'm going to restructure this debt. What does it mean? Guys, are you still there?
Yes, gonna come.
Yeah, come in.
Yeah, I think it's where you try to negotiate with your creditors to maybe reduce the credit term and interest rates, and maybe try.
I'm sorry to cut you off. I'm struggling to hear you. You say you're discussing with them to say what?
To maybe reduce the credit terms and credit interest rates.
So to reduce the terms, right? Or let's say renegotiate the terms. Right? Yeah.
To be a bit in your favor.
I'm struggling to hear you. So you're saying renegotiating the terms, and then what was the second point?
Maybe they show the reduction in terms and interest rates.
Okay. Yes, and 100%. I agree with you. So one, it means that we're renegotiating the terms. What are the terms of the loan? PV, FV, and I. Right? So I'm renegotiating the principal amount that I need to pay, the PMT that I need to pay you, or maybe let's reduce the interest, or then let's reduce then let's extend the number of years to say I was supposed to then pay you off this debt in the next 3 years, then I'm going to pay it in the next 10 years, for example, so that you can give me that financial break a bit. What is the second thing that you can do when you are restructuring debt?
Amanda?
Yes.
can we use for, because now we're gonna sell the non-core asset immediately. Can we then use the cash flow to then repay some of the debts?
Okay, so that's a consideration, né? So and I want you to hold that thought because what am I talking to?
Mongezi.
Mongezi. Okay, I want you to hold that thought, Mongezi, because we're gonna come to that. But then now the question would then be, one, we said we're gonna sell the non-core asset, being our first solution, right? So it's fine. We're gonna talk to that. We're gonna talk about, okay, what are we gonna do with the money? Is it gonna be an advantage and all those things? Then two, we're saying after selling off the debt, we're also going to think about restructuring the debt. After selling off the non-core asset, we're thinking about restructuring the debt. And I didn't get his name. The previous guy said it means that if we're saying restructuring the debt, we are renegotiating the terms. And I said yes. So it means that I can then come to you and say, my plan, okay, I'm the board, I'm the chairperson. The plan here is to say, one, we're going to sell all these non-core assets. That's the first thing. Two, we're going to go to our creditors and then renegotiate the debt that we have with them, meaning renegotiate the terms, right? So that they can give us that breathing time. What else does it mean? What else can we do when we restructure the debt?
Hello.
Increase our credit facility, maybe.
Sorry?
Okay.
Oh, sorry.
Increase our credit facility.
So we can increase our credit facility. Okay, let me just put it there. Increase credit facility. So this will then be with the bank, right?
Yeah.
Okay, so let me then put it here. All right. Yes. So we can then say we have an overdraft of 15,000. Then let's go and then negotiate to get more debt and get money and then use it somewhere. All right. I'm going to put it here because I then need to also discuss this and also apply to this scenario. All right. What we can do again, right? It means, so renegotiating the terms then talks to a lot of things, right? So we can say we are going to then write off a portion as well, or write off the full loan. So I can then come and negotiate with some of the, although this one is a hard one, but I can then come and say, okay, one, I have creditors that I know that I have had a relationship with for a very long time. Then I can come and say, guys, I owe you 10,000. It's fine. I want us to negotiate to write off this loan. So we can then write it off full loan or write off portion of the loan, right? As part of then restructuring this debt. So I can negotiate that. Secondly, I can then come to you and say, let's convert this debt to equity. So I come and then say, let's convert this debt to equity because it means that I don't have to pay the interest amount. And if I'm not paying the interest amount, I'm giving myself a breathing room because I don't have to then pay for the loan and the interest. Because the interest, remember, when we're doing financing, so the interest, you have to pay it. You don't have a choice. Or else, if you convert this debt to equity, you can then say dividends, I can declare as and when the company is fine, right? So then you can then also talk to some of these things. Thirdly, and some of them might not really apply here, but I want them, because this question you might not see it again. So I want you to then think about these things when you then go through the questions. That's the other thing that you can talk about. When I go take a loan, I get what we call covenants, right? So you might say that I'm giving you 10 million and I'm saying that you must not get any other debt until you pay me half of the amount or until you get a profit or an EBITDA of so much. You must not get any other loan. So it means that I can then go, and this also talks to them the terms. But remember, sometimes when we talk about the terms of the loan, we think about the PVI and we forget about that sometimes there are these covenants that are stopping us as a company to say we can get more loans. So if we then deal with this, it means that we can then go out there and then still get more loan. So if they are there, then that's something that you also then talk. We then have to then talk about all these covenants that are there, right? So it means that that's what it means here in terms of debt. And then in terms of equity, it means that I might then say, yeah, coming.
Before you go to the equity, I wanted to ask about the debt of the restructuring of debt. I can see that we spoke about the renegotiation of terms, converting it into debt to equity. So I don't know if I'm allowed to think this way, but I just wanted you to help me with the thought process. Is that since the company has a core, non-core assets, right? And now it's also, I can see that they have a debt with bank and also other creditors. Is it possible also to think in a form that, I don't know if maybe because it's not related to the scenario, that also instead of paying in cash, we can pay in a form of a specie, asset specie. In other words, like maybe I say, can I give you this building to pay the bank? Can I think that way, or I'll go off track also in restructuring debt?
So yes, that can be one of the negotiation, right? So yes, and it does not stop there. You then need to apply the scenario, right? So firstly, if I'm saying non-core assets, I need to know what are those non-core assets that are there, right? And then again, if for example it's a building, so if it's a building, so obviously, okay, if it's core assets, then it can be difficult because if you're selling them, those might be the assets that we use to generate all these things, right? Generate whatever we are selling, or they can be very much useful because they're core assets there. So we are generating then the profits and the income utilizing those buildings or those assets. So when it's non-core assets, you then need to then go further to say, what are those non-core assets, and if are they going to then be useful to the bank or to the creditors as well, right? So I'm just thinking that if I then can I negotiate to say, okay, just take this and then you then go and sell it. But now I have to then think about, are they going to be willing to then have that admin to say that this guy, instead of money, we gave him money, is giving us these assets. And again, I'm not setting a precedence here to say, are these people going to then give me loans next time? Because now I force them to take things that they don't really need to say, make a plan here, right? So it depends on how you then put it. You can negotiate that way, especially with non-core assets. So you can but again, here you are selling them so you can get the money and then you pay off the debt, right? Rather than giving them the asset for them to sell. Because again, we need to then consider the relationship between us and those people again. But you can then negotiate it that way as well. Just that in this scenario, you already told that we want to sell. So your point can then be, when we get that money, we can then pay off some of that debt.
Because I wanted to say that reason why it made me to think that way, because I was looking at the renegotiating of terms. And then I saw that Euroflex has actually a history of renegotiating in the scenario. And I do not know if does that affect Section 4, because I know it might not lead to a good answer for Euroflex. And I don't know if I'm allowed to write that one, or it's just a thought process, or I must just write it down and I might get a mark out of it.
Does that affect Section?
The thing on one of the scenario, I think it's part of the background or the financial statements notes. They wrote that they do have what I understood, they do have a history of renegotiating with the bank. So now I see that truly that we do renegotiate. Yes, we do. We want to renegotiate terms, but it might not fall into good terms because they have a history of renegotiating twice. So I don't know, because that one is giving me like a thought block that when you guys talk about renegotiating terms?
Or no. Yeah. So you can then put that as a consideration, right? To say that I see you are saying as part of your restructuring option, you want to restructure debt, and restructuring debt means what we are talking about here. So it means all these things. If I'm saying I'm going to restructure debt, it means I'm going to renegotiate. So I'm going to see how I renegotiate from what I'm doing now into something that's going to be beneficial for the company. So you then can say, I see that you're considering restructuring debt, and this might then include renegotiating or waiving some of these things. Based on our bad history that we have, then we then need to consider maybe if that then is going to be possible, because we are like you said, have been renegotiating. So what is that going to then do in terms of our reputation, and also are we going to then be able to then renegotiate with these creditors?
Oh, so basically what you're doing now, like as we're reading now, is that, okay, this is my reading time. Yes. And I'm trying to understand. So if I see, like, for example, as you said, the profitability of the Euroflex declining, what hint does it give me out of it? That means there's a possibility I will not be able to pay my debts in short term or either long term run. Exactly. If I see restructuring of its debt, what does it mean? What should I do? So now that is me and my thinking time of that 15 minutes.
Yes. So this is then you going through the scenario, and then trying to then break down the scenario so that you then even know and understand it, to say, okay, these guys, they did this, they're doing this, and then they're doing this. And then you then need to get to know what does it mean that they're doing all these things.
Oh, okay. Now I understand how you're taking it. No, thank you very much, sir.
Sure. All right. So equity again, and then the reason I'm also doing this is because you might find another scenario which has some of these things, right? So remember, when you're going through this, we are preparing you for the test that you're going to write. So we need to then consider all of these other things. So when we discuss now the solution, some of the things might not really be applicable, but then it means that next time when you say restructuring, you know that, oh, okay, this is what it actually means. So in terms of equity, restructuring equity, then it means that you can then, so equity has to do with the dividends. So say we're given a dividends policy to say that, okay, these guys, they declare dividend each and every year. So it means that we can then go and update our dividend policy to say that, okay, hold on, this year, no dividends, or no policy that we're going to do. So that's the first thing. Or then we can also then go and then do, if we have the money now, to say restructuring is to us buying back our shares, or getting a third party to then come in as well, and then do a major acquisition, and then we get then synergies from that. So those are the things that you then also think about. But it's very much important to then separate, to say, one, I'm selling this immediately. What does it mean? So it means that if it's immediately, do I have the capacity? Have I considered everything that I need to then do? What am I selling? The non-core asset. What are those non-core assets? I then need to know. What are the value of those non-core assets? I then need to know. And then I need to restructure. So what am I restructuring debt? What does that entail, and what does it mean? And then equity as well, right? So already you have 1, 2, 3, 4. Then the sales of non-core asset will provide an immediate cash inflow. All right. So again, what did I say? I said when you talk about the qualitative, you talk about both things. You talk about positive and negatives. So maybe this might then be a good thing to say we're gonna get an immediate cash flow, right? But again, I have to address the immediately part to say, hold on, you're saying you're gonna sell this immediately, are you sure? And then have you considered everything? If the people agree to the price and that you then want to then sell, then I'm told that this will then provide immediate cash flow that will enable Euroflex to meet the bank demands and reduce interest payments. Okay, so then this can then be another positive thing. But I then need to consider something here. I then need to consider to say, all right, even if I'm then addressing those interest payments that I'm then cutting down, I'm cutting down these interest payments that are there. Is it going to then also sort of like give me that breathing space? Which the answer then is then yes, right? Like the I don't know who was Asha or Mangisi who said that we then need to use that money of selling the non-core asset to then reduce the interest that we are paying. So we can then use that, and then it means that we can then meet some of the obligations being the interest. All right, so creditors will also be approached for more favorable terms. So again here, someone spoke about us always renegotiating. So how is this a good thing? Are they going to agree? These creditors, when have we considered, have we then considered some of those things, right? Then we're told that we must not discuss the reduction in workforce. Right? Oh, so the reduction in workforce discussed under 3 is the main aspect of ensuring return to profitability. But we're told on the required that we must not then discuss the consideration regarding the move to robots. All right. So
Sir,
yeah.
sorry for disturbing.
No. Go for it.
I saw that earlier on you gave an alert that we can discuss tax implications.
Yes.
Yes, but not in a calculation form, but in an application theoretical form. So now on the non-core sale of non-core assets, why did it not hint to us that there might be a tax implication? And if it is, how can we think through that part through the reading time?
So you at this point in time, you haven't seen the required.
Okay.
So no, I'm asking.
No, if we are looking in a part of a reading moment,
okay,
we have not seen the required. And
yes.
as you discussed that this is the time where you have to critically think, take out all whatever is in your head, whatever ideas is coming out, write it down because you might forget it when you're going to see a required.
Yes.
So now my question is, obviously, as a CTA student, I know some way, somehow there is an integration, and some way, somehow there is a deferred tax integration with the selling of non-core asset, or I can think of taxation because it's actually a company. So everything covers it because you also think about compliance. So my question is now, why when we were reading that sentence, as you explained, why did it not trigger any tax implication or anything that can say, think about this when you see that sentence, or it might help you on your required?
Yeah. So 2 things. One, very much important. So when you do integration, right? So and you have this integration head on. You always need to then consider all those things. So you need to then consider what will then be my tax implication here, because you don't really know the required. So you then need to think about it, right? So even when we're reading here, so because maybe it's because I then went to the required, but then you then needed to think about some of the things to say, okay, selling, and remember we said that even if we don't talk to if we don't talk to the calculation part of the text, we still need to think about the qualitative part of the text. So it then means that you then need to then put it as a factor here to say this or selling of this has tax implications. So we need to also consider those tax implications.
Okay.
So and then again on debt, when you then talk about rating of the debt, you then need to also think about this also has tax implication. We also then need to then consider those tax implications, and then you're going to get a mark to say that you understand, to say there's going to then be, if we sell it, CGT implications and all those things, and then as a qualitative factors, because remember, tax is a cash flow, so you then need to consider it as well.
Okay, no, now I get it. No, thank you very much, sir.
Sure. So you then needed to then consider it.
Okay.
All right. So so we have broken down the scenario. You know the required, and then you know the structure that you then need to do. So then let's deal with the first part, being the restructuring. So what are then qualitative factors that you guys thought about? Yeah, the qualitative factors and quantitative factors that you wrote down when you were then going through this tutorial. So what are some of the things so that we can then discuss them? Okay, anyone wants to go for it? And even if you didn't do it, already we've broken down this the restructuring part. So you then understand some of the things that we can then also talk about here. So what are some of the things that the board should then consider when if then they choose to say that they are doing the restructuring option?
Afternoon, sir. I only got the question just now during the session. It's Sandy. I think maybe the board will consider what the other stakeholders will feel about the decision to restructure in terms of qualitative.
Okay, so the board will think about what
the other stakeholders. Yes, because you mentioned the dividend and you said they might probably need to amend the dividend because if they're going to the equity method, some shareholders we need to understand, are they the type of shareholders that want their dividends every year? And how will they feel about them not at some point getting a dividend because they need to restructure, and repay certain things. So we need to understand from that, we need to consider that to say, should they not give them the dividend, what would happen, in the future? That's what's my thinking when I was thinking about the whole qualitative thing.
All right, I hear you. I hear you. So yeah. So here, how many shareholders do we have? And I mean that's always something to think about, right? So to say, if you are then restructuring. So firstly, how does restructuring, how will it affect? So maybe open your mic and then let's have the discussion. How will it affect the other shareholders, the restructuring part of things?
Wouldn't there be dilution of shares if we're converting the debt to equity? The share, the holdings percentages, wouldn't they be affected?
Yes, but you see now you're also expanding now, right?
I'm expanding.
Yeah, and no, I'm saying that's what I want to say. You're making it more clear to say, okay, maybe if we then restructure debt, and then we're saying we are converting the yeah, in terms of the loan part, then you can then talk about issues that involve shareholding. But again, remember we have two options here. So either way, the company is closing, right? It's either way restructure or we then liquidate. So okay. When advising the board, then you are saying that they would rather liquidate, because if they're liquidating, it means that all the shareholders are
going to lose. Yes. Sorry, as I said, I only got the question now, so I'm just trying to follow through. I haven't had time to read through everything. I'm just thinking at the top of my head. I'm sorry. That's why I'm going off the tangent.
It's a valid point. It's a valid point. We then just need to then dive deep also to the scenario to then make sure that it's applicable to the scenario. But here now the board has two options that they need to do. It's either a restructure or it's either a liquidate. So in terms of the qualitative side and some of the things that I then also need to think about as the board to say what is then the issue when it comes to that. Anyone else to go for it?
Hi, sir.
Sure.
Hi. Oh, sorry.
Yes. Oh, two people. Okay, the lady can start.
Oh, yes, it's not a lady, it's a guy, sorry. Yes. So okay, I'm not sure if my thinking is in the right direction, but then if you look at the the restructuring, right? When you when they're talking about selling non-core asset and also debt restructuring. So I was thinking that to say, since they were there's that immediately selling of non-core assets, linking it to the debt. So debt must have some sort of a collateral. And now for banks to actually give you low interest rates, you must you must offer them something. So I was thinking of adding to say, on top of this, instead, in terms of restructuring their debt, can't we then add to say, can't they offer some of the valuable assets that are non-core to their lenders so that they can negotiate for a lesser interest rate or favorable payment? So using the collateral as one of the non-core assets.
Okay, I hear you. I hear you. Thanks for that. So, okay, let's then go to the required, right? And then I can then touch on your point. So the required is saying make a recommendation to the board addressing this of the two options, either to restructure or liquidate. And then we are told that the board is sitting to discuss these issues. And this is what they've tabled, right? So, and then what the table is that they want to sell all the non-core assets. So you then need to then think about, okay, the board wants to make this decision as part of restructuring. What are some of the things that they should have then considered, or some of the things that they need to then think about before before this then happens, or before their discussion that they're then talking about. So, so yes, we can then, when we are negotiating, to say the board, have you considered the fact that maybe we can then give we can then give some of the debt of the debtors, some of this core asset, right, in terms of negotiating. But if you then go down here, we are told that the sales of non-core assets, so the board has decided that they need to sell, and they say the sales of non-core asset will provide cash, and then the board will then take that cash to then reduce outflow in terms of some of this interest payment. So already the board have then considered to say that if we then sell and then we have the money, this money is going to then work in terms of addressing that debt that we have. All
Sir?
good. Yes.
Can I add to the quantitative factors that I considered?
Yes.
Quantitatively, I would have considered that they didn't stipulate whether they are going to have a rights issue to replace the debt, or if it's going to be their own contributions that they are going to contribute again. But if it, whatever the case will be, if the equity increases, then the capital structure will change, and therefore the WACC might increase. And then that will also change the valuation of the company. So that might affect the shareholders and investors, because their value, the valuation of the company that they hold now may not be the same as the company that they hold in the future.
Okay, so you are then talking about the capital structure.
Correct.
To say that if then they change their equity is going to talk to, and I think that someone also pointed it out, right? To talk about then the structuring and the capital structure of equity.
Yes, but I didn't get into the details as a previous speaker spoke as to whether or not there would be a dilution of their shareholding, because they didn't stipulate whether it would be a rights issue or whether it would be a or whether the shareholders would contribute more. So I'm not sure how much detail one must go into to say, okay, because one doesn't want to assume that they are going to have less holding because they didn't say that they are going to issue for every one share. They're going to issue 5, for example, to the same shareholders. So maybe if you can just advise on that.
Okay. So okay, I hear you. So the reason we want to do this, right? It's because we want to ensure profitability, right? So we want to then ensure that, so when we're restructuring, it's because we're having issues and maybe we can't meet all these financial obligations that we have. So we then try to see how can we then ensure profitability and ensure that we continue doing that. So we need to then keep that in the back of our mind. So if you're then talking about the equity part, I think if you go to write-off issues, you are then going too much into detail, right? You are then going too much into detail because if we then do a right issue, because now I'm just trying to think, whatever we are doing has to then save us money, or we then have to be at a point where we are sort of like saving at the cost. That's the purpose of restructuring. So I wouldn't want them to say we are restructuring and then you start thinking about things like share buyback in terms of the equity part of things, because now that involves us sort of like taking out money. So there's no savings to it, and it does not ensure the return to profitability. So I just want, when you then think about these points, you then need to then think and have that big picture to say, if you are saying you are restructuring and if you are saying this is what you need to do, is it going to then get to the end point that you then want as the board, which is then to say that we want to save this company and then we want to then return back to profitability. So you then need to have that on your mind, right? So it means that if we're then, so the first thing that we then need to consider, so if you then go down here, we're told that the PPE is 98 million, and the non-core assets can be sold for 12 million. So this is the amount of, yeah?
Sorry to cut you. I just wanted to raise my point quickly, just to be sure if my thought process is in the right process, as we are still thinking and we are still in the reading stage. So the second or third last speaker talked about integration, and you are still reading and you're still unsure what you're doing. So would it be a far-fetched thought to also consider thinking about, since they talk about selling of their assets, think about Companies Act implications? Would it be a far-fetched thought to consider that as well? Like section 112 or 113, where a company sells most or a greater part of its assets.
Yeah, and that's 100% correct, right? So you then need to think about legislation as well to say, okay, the company you are restructuring, you're liquidating, right? So the Company Act talks to this, right? Liquidating their requirements that you then need to adhere to in the Companies Act. So you then need to, and they don't mention anything about that. Yes, I understand that you're talking about then the liquidation and stuff, but then there are requirements which are required by Companies Act that you then need to then comply with. So yes, you can then touch on that as well. Happy? All right.
Yes, sir. Yes, sir. Thank you very much.
So, all right, guys, let's move a bit now. Né? So now I went to my required, and then I then know the structuring. To say this is the structuring, I know what I need to ignore. I then know what I don't need to consider, and I then know what I need to do. So firstly, I'm being told that the board wants to sell this non-core asset, and then I read it's 12 million, and then we're told that they want to sell it immediately. So my consideration then will then be, one, since we want this money now, and we want to meet the bank's demand, right? Because we were told that the bank overdraft, and then it's here. So we're told that the bank overdraft facility is 15 million. The bank has already indicated that it's expecting Eurofix to reduce the facility to at least 10 million within the next 2 years, right? So that's some of the bank's demands to say the facilities, you need to then have it for 10 million. And I'm being told that I'm selling this immediately. So one thing that I can think about is to say, all right, one, you are telling me that you want to sell this non-core asset at 12 million. One, have you found a buyer for that? Have you because you are confident that these are going to go for 12 million. How sure are you to say that when we then sell this non-core asset of ours, which you want to sell immediately, we are still going to then sell, because you're telling me that they can be sold at 12 million. But then are you sure that that amount is now the amount that we're then going to receive? Have you identified the buyer that is then going to buy? Because it seems that you are then just putting all these numbers here, but you haven't really considered what if we then get low and then we get 6 million, for example, for those core assets, and then we have chose this restructuring decision, and then based on the 12 million, but then now when we now get the buyer says they want to buy at 6 million, and we've already chosen this option using the 12 million. So now I want to then know from you to say that, have you then found the buyer and have identified the buyer, and how certain are you that you're then going to receive the 12 million like you have said? Happiness. Guys?
So,
Yes, thanks.
Happiness.
I'm not happy.
Yes. Let's talk.
Yeah, so like the way your thought process, I'm off ramp because I don't like, okay, recommendation, first of all, when you look at the requirement, right? It says that you must give, it means that you give out the best option to the company. So now we've read it, and I see what you're saying and the thought process, but now the way you are looking at the selling part of the core assets, and are you looking, first of all, my first question is, are you looking at the qualitative part or quantitative part? And number two is, how did you get to that questioning that, have you found the buyer? Because to me, first of all, if I must be honest, when I read this, is that first of all, it said, how sure I didn't see the part that it will make a profit. So I was going to say, how sure of you that the money that you have after selling it, it will cover up all your debts? And number two, will it lead to profitability? Those are the two things I came up from.
But I get, yes. So let's stay to that. So before you then say, will it lead to covering of the debt? How sure are you that you are even going to get that 12 million as an amount that you're going to receive?
But that also leads to me, how sure are they that the money will give an immediate cash flow? Because the way I understood how you're explaining that, you guys are so sure with this scenario that A, they are going to pay this debt. But now when you come with that question, it makes me doubt the scenario again, the second sentence.
Okay, so the second sentence is saying we're gonna get immediate cash flow. So they're saying, the board is saying we're gonna get this 12 million when we sell immediately this non-core asset, right?
Yes.
And then it's saying that one, when we get this cash flow, it's gonna enable Eurofix to one, meet the bank's demands, right?
So is this a probability or it is an of course case that will have an in cash flow? Like there's going to be money coming out of this sale, because isn't this, when you sell an asset, how sure are we that they're selling an asset that is good standard? When I'm thinking about the questions that you've made, you gave us now.
Yes. So okay. So the first thing is to say they told us that this non-core asset can be sold at 12 million, right?
Yes.
And then the board then is saying that 12 million is then going to address these two things. So the first question then will then be, if you are saying that you are going to sell this non-core asset at 12 million, you already have a specific price. So I will assume that one, you have a buyer already, and then two, you have already agreed on the price, right? Because like you're saying, if that's not the case, and then you are then telling me to say that it's going to then talk to these two here, if I don't then get that 12 million, you might then have, you might mislead yourself when you're then talking about then these two requirements that are here.
Okay, now this is going to the first question that you asked earlier of this meeting.
Sure.
How does this relate to strategy now? Because I see it is in distress, and strategy is a way forward to this thing, right? So this question, because now I don't want to, because I promise you right now, I'm thinking about when you explain, I'm like, this is financial distress. How am I going to relate to it? So now, how am I taking it to the strategy point of view now with all this thought process?
Okay. So what is then strategy, right? Then I hear you. You want to then bring in terms of things that we then want to do in the future. So remember here, we still have two options that we then need to consider going into the future for the company. So we then need to consider to say that in this company of ours, for us to then remain, what are we then going for as a form of us then surviving as a company, looking still at the future, which is one, are we then going to go for the restructuring, or two, are we then going to then liquidate our company? Okay. So you still have to advise the board in terms of the decision that they need to then take for the future that is going to affect the company, and things that they then need to consider in the decision that they have to take.
So in this thing now, I'm looking at, obviously when I saw this, I have to give the positive of this, my restructuring, and the negative of it. And now it's going to push me to a way forward saying that, okay, fine. I see that you might want to, maybe it looks like it's a good idea reading that you must restructure it and liquidating it. But when I look at my negative outweighing the positive, this is the way forward in the strategic form.
Yes. So you are giving considerations, right?
Yes.
So you are giving consideration to the board to say restructuring. What are the, and it's like, if I come with a strategy, you then need to look at it both sides. Because remember, I haven't implemented it. So I need to see a bigger picture of what are the pros and cons. What are the things that I need to look out for? Because if you then tell me only about things that are good about this strategy, you may be choosing it for me, so okay, go for it, and then I go for it, and then you find that there's some things that I didn't also consider again. So you then need to look at both sides. And this is what we are doing here, right? So here is that we have two things which you have to then get inside. The first one, discuss again when you are there, and then go to the second one, discuss again when you are there, and then conclude. And then, yeah, I mean, some of the things obviously has to do with financial distress, but strategy comes in many forms, right?
Okay.
So yeah, happiness.
Thank you very much, sir.
All right, sure. Then the other things that you can think about. So restructuring again. So if we then think about the restructuring, so we are selling the restructuring part of things. If we then restructure, it means that the outlook of the company, and how we then, and how the employees inside will then see the company. If you go then down, and we will see when we read it, they talk about skilled employees, to say that they've been leaving and all those things. So now I'm then thinking to say, if you then restructure, one of the things that I can think about is then how will this impact, the ability for us to then retain those key employees? Because now you are selling off some of the assets. Now we have an issue as a company, and then you want to restructure. So how is that now going to then affect the morale and just then the ability of us to then retain these employees that are here? So that's something that you can also then touch on that. Then again, the 12 million that we're going to receive, we then need to then say so if we then receive then the 12 million that we are getting, and before we even go to the 12 million, when we talk about renegotiation, someone talked about renegotiating the terms with the customer or with the creditors. So I'm now trying to think to say, one, you want this to be an immediate plan because the company is having problems now. And then we know that restructuring can take long. Because remember, this is, you don't just wake up and say you need to restructure. You need to think about some of those things that you guys were pointing out to say, how are you restructuring your debt? How are you restructuring your equity? So this then can take long. If we then consider the time frame of doing this, because it might take time, right? And then again, if it's second time, we are having an issue now in terms of the profitability. So that's something that you then the board needs to consider when it then comes to restructuring, to say that the time that is there, that is then going to take this restructuring. And again, it doesn't mean that if we're negotiating, the creditors are going to allow us. So you might then say as a board, we're going to approach creditors for more favorable repayment terms. But then I can say, no, I still, as a creditor, I still need my money. So I need you to then pay me the full amount, right? So it doesn't mean that because I have a plan, it has been approved also by the creditors. We still need to go through that phase of saying, hold on, let's negotiate. And the creditors can say, no, I want my money, because I know that if you liquidate, I get paid the debt off. So then there's that arrangements to say that you still then need to go through all those arrangements. Then again, if you're coming to the creditors, so we spoke about a lot of things of saying, what if we negotiate with our debtors and the money that we need to pay and all those things. If we then negotiate with them and we keep on going back to negotiate with them, what does that do to then our work relationship and our reputation with these people now? Because now we are negotiating always. We want to negotiate favorable terms. We want to negotiate to restructure. So what then does it then do to then the reputation of Eurofix? And are these people going to then be willing to then give us further, debt in the future? Because now we are then just coming then renegotiating. So what does that then do to the reputation? So that's something that again you can then also talk about. And then also in terms of the tax, so we spoke about that to say if we are then waiving the debt, we then need to consider all those tax implications that are there, because we were told not to take into account the tax in the calculation. But then again, when we are then talking to, when we're then talking to the qualitative, you can then also talk to the tax element of things to say that, all right, this means that we would then need to then also take into account those implications that then talks to the tax side of things. Happiness. And then again, you can also talk about some of the things, right? So if we're restructuring again with the 12 million, how the 12 million that we are selling, if this thing then takes time, we might need money in the interim, right? To say that we are able to still service some of these things, right? Because now if we then get the 12 million and then it takes time to then sell, because we asked to say, do we have everyone, they have identified a buyer. But if then we have been identified a buyer, it means that in the meantime, because now we are having issues, we then need to still pay our interest payments. So we might then need another amount or an interim financial amount, which we might not even get in terms of us to then address these interest payments that that we have to then we are obliged to pay. Are we still together, guys?
Oh, good.
All right. So So then that's some of the things. So in terms of the qualitative, you then bring the 12 million, right, to say, okay, I hear that we are then getting this 12 million amount. So again, you then need to then just consider it if it's then going to then be enough to then talk to some of the debt and the long-term borrowing that we then have here, and also just to then meet then the obligation as well of the bank. Yes, it can reduce it to the 10 million for the next 2 years, but then again, is it going to then be enough for us to say that we are now able to then start getting that profitability and then sustaining the company as a whole? So that's something again that you then need to then also consider as well. Then that's the restructuring, right? And I'm checking the time, so just bear with me. Let's touch on this, and then we can then go to take a break and then finish off with the other 2 questions. So here, obviously, you see you need to do calculations here. So you then need to get the NIV. And when we are liquidating, remember, what is liquidation? Liquidation is we are saying that we are going to sell all our assets now here, right? So here we are selling all of our assets, and then we are then paying off our liability. And then if this amount that is remaining, we then give it to our shareholders, right? So if there's no money, remember the shareholders, they are last on the line as well. So it means that we then need to calculate our amount, which is then the amount that we're going to get after selling everything. So here we are told that PPE will realize 98 million, which is in line with the current books and tax value. 19 million includes the non-core assets. We spoke about the 12 million above. So this 98 million, it means that we're going to get the total amount of it, right? The 98 million. Because remember, if we're liquidating, we're selling all our assets, core and non-core asset. So it means that I'm then going to say, what are my assets that I'm selling? And then include all of my assets as part of then the amounts that I'm selling. So what are my assets? So 98 million. Then another asset here that I'm also going to then sell is then the financial asset is an investment in the cumulative preference shares of a company, which is listed on the JSE. Eurofix has received a consistent dividends. So remember that it means that we can then value the preference shares if we, because the dividend is consistent. So we can then use the method of then dividing our dividends with then the return, right, to get the value of the preference share. So we are then told that this is then 480, and then we are told that the market return here is 8.5 nominal and pre-tax. So then if you then divide this by this, you then get the value of the preference shares, right, if we're then selling them off. But we are told that the preference shares could be sold for a market value less a once-off commission, meaning that that value that you're gonna get, you're then we're gonna only get 99% of it, because 1% is then going to the expense. So then you have your second asset that you are going to then get money from when you sell. All right, then inventory, we are told that it's gonna be sold at a discount of 20% of the NIV. The NIV also, they told us here, so we're gonna then calculate that as well. And then we told that the debtors or trade receivables, we're going to collect only 90%. So it means that you can then come here and then calculate the 90% of the debtors. And then we are told to say that all other debtors will be settled in full. So then the debt, we then need to see what debt we have. So it means that in terms of long-term borrowing, we are told that we have then the loan that is there, which includes the 70%, 70,000 loan, and then the other is shareholders loan. So the 70,000 will be paid in full, but then the shareholder loan, they say excluding the shareholder loan. So liabilities that we're going to pay will be 70,000. Intangible assets, they have no resale value, so that's going to be 0. deferred tax also has been written off, so they won't have any deferred tax. And then you're then gonna come and then see what are our other liabilities. So that will then be trade and other payables, short-term borrowing, and also bank overdraft, meaning that we also then need to then pay all of those assets that are there. Then we have then the 20%, your 80% cost of liquidation, which you also need to take into account. So once you do all the assets, all the liabilities, all the liquidation cost, you're then gonna get then the amount that we're gonna then get at the end. So that then will then be the calculations that you're gonna do. And remember, you're not taking any tax into account here when you do the calculations. Then you then go to the qualitative factors of then the liquidation. And then again, if we're then talking about the qualitative factors, someone spoke about the Companies Act. So in the Companies Act, it talks about liquidation and the requirements that one has to adhere to. So this means that that's something that you can then take into account when it talks about then the qualitative factors. Then remember, you then also have to talk about, so if you're then doing this, it means you then need to then pay off all, you are actually liquidating the company. So yes, we were told not to discuss the robots, right? But remember, the robots only talks to the 200 employees, so there's still 100 employees. So here, we're also going to lay off those 100 employees. So have we thought then about the retrenchment cost that can then come with that, right? All the retrenchment costs, the payouts of the leave, because we still then need to pay out because we are then liquidating this company. So that's something that the board need then to then think about. Again, what we then need to consider here, remember shareholders, if we then don't have anything, because we're told that the shareholders loan will be written off. So it means that shareholders are not going to get money for the loans that they gave to the company because we're not going to write it off. So do you think then shareholders are going to be then fine with it? Have you considered that to say shareholders, if we go for this option and not try to save the company, they then do not get anything because their loans are then going to be then written off. So that's something that you then need to then also consider. And again, remember, this is Eurofix, but then it also has the Eurotile, which is then the main company. So these ones are still functioning. So as then liquidating this, what impact, what reputation is it going to give now to then these two companies? Because remember, we were part of the same group, but then now you are then liquidating this one. So when people then see this to say that you are liquidating the company, how then does it going to impact this, the group, which is Eurotile, and then also the reputation in other areas of its business? Because remember, they're still going to be doing their business. So that's then something again that you can then sort of like put down and then also consider. So and then again, you can then also talk to the group. So it means that this, remember, it was then supplying those adhesive to the group. So it means that now those guys now need to find new suppliers that are then going to then talk to then that supply, because now you are then liquidating the company. So those are some of the things that you can then also touch on. Sorry? Come again? All right. Okay. Then after doing that, you then recommend. So remember we said we then need to recommend, right? And then we then need to conclude based on some of the things that we gave them to say, consider this and this on this approach. And then on the other approach, consider this and this on the other approach. And then from there, you then go and say, okay, I then recommend, because the board asked you to then recommend here. Then you then say, for example, I then recommend to say, maybe restructuring might be beneficial and like it's more unlikely to sort of cause disruption, because remember now here we have to sell all our assets, we have to then pay retrenchment cost, we then have to not save the company, it has to affect the group. So you might say that maybe let's go then for retrenching instead of then liquidating. Or based on your discussion and how you then view things, you can then also say, maybe let's go for liquidation because of this and this and this and this. So the recommendation will then come from what you then have discussed. And then you can then discuss, and we see that you are in your discussion, you have issues that talk to restructuring, and then you then go conclude otherwise in terms of your recommendation. So when I see a recommendation and I see the way that you have then discussed the recommendation, I then need to then say, okay, I see why you will likely come to that recommendation as me being part of the board. Any questions?
Sir?
Sure.
What would your recommendation be after we all discussed this? Just your recommendation now.
So my recommendation will then be restructuring. So, and I think even if you then go to, if in the industry, I mean, before we say we are closing off the company, we need to try to save it, right? Either way, somewhere, somehow. Because remember, if we're saving it, we're saving not only the company, we're saving the people working for it, we're saving the relationship with the creditors, we're saving our reputation as well. So for me, I would then have said, liquidating, it will require a lot of admin, because remember, here we have to find buyers for all our assets. That's the first thing. There we just need to sell buyers for our 12 non-core assets only. Here we then also need to make sure that we sell off our investment in the JSE as well. We then need to make sure that our inventories are being sold. We then need to collect our, like there's a lot of admin as well that we then need to do. There's a lot of disruption that we then need we then need to do. And I mean, in terms of cost, we might end up, sometimes when we are liquidating, the liquidator just wants to pay off the debt. So whether we are getting the money as a profit, it does not matter. It's like if a bank repossesses your car, they just want to cover their debt only and then not give you then the profits, or not sell it at market value, right? So we might then have those issues to say that yes, we are then having a problem. But if we are then saying that we can't save this company, so if you're saying that, hold on, I think liquidation is the way to go, because it means we can't save this company. We have too much debt, and it means that we can't then get any equity restructuring, we can't get any other partner, we can't get any inflow. I think liquidation is the way to go, because we just want to then incur expenses and not then be able to recover. So I would have then said, let's then go with restructuring.
Okay, thank you. But can I just add a little bit of an aspect here and see how would your answer change? Or maybe let me just put it this way. Yes. I know that there's a stakeholder theory now, not just a shareholder theory. But what if, let's say, in your discussions, because I see we're trying to save the capitals, the six capital, focusing on humans, on creditors, on employees if we liquidate. But what if we liquidate at the moment, the company is profitable, but it's losing its profit? And if, let's say, the scenario said liquidating at the moment would realize to shareholders taking out their investment and an extra profit. And at the end of the day, the company belongs to the shareholders. It may represent everyone, the community, the society, the employees, everyone. But at the end of the day, it's the shareholders' companies. And if you were to liquidate this moment, you would give them money. Whereas if you continue operating for 5 years and try and do a restructuring, it's not guaranteed that their money won't lose. How would you then maybe conclude in that situation if there was that aspect of this question?
Okay, so if that was added, because here, and then I'm going to come to that. So two things. So here, one, the shareholders, or if we liquidate, the shareholders have given us loans, so that we're going to then write them off. So that's bad for the shareholders. Secondly, one aspect that you need to think about is that although the company belongs to the shareholders, the shareholders are last on the hierarchy, right? So if you are liquidating, it doesn't mean that the shareholder is going to realize profits because they're last on the hierarchy of payments. So if I'm going to liquidate a company that has a lot of debt, it means that whatever income that I receive, I need to first service the debt. So I can't skip that. I need to first service the debt. And then when everything else is paid, if I have income remaining, and that will then be the important part. So if after servicing my debt, I have now the profit remaining, then we can share off the profit. So then again, another aspect will then be, if we're sharing off that profit, what was my investment to begin with? Did I make a return, or I'm just then cutting my losses to say, okay, sharp, let me then take whatever is left here because this company can be saved. So there's that aspect to it. But you then need to remember to say shareholders will be last on the line, like no matter what. So the debtors are gonna be fine first, get their money, and then if there's then something remaining, if there is something remaining, I then get the amount. And then if I'm getting the amount, then as a shareholder, the next question would then be, did I get return for my investment here? Because remember, and then you'll see this when you're doing financing as well, the shareholders' return is always higher than the one of debtors because of the fact that they are last on the line, right? So I would have then, when I invested, I would have then required a higher return. And then now I want to then sit with these profits that I'm getting and think to say, did I really make profit, or it's just a matter of saying, okay, this company can be saved. It's better I get this amount than getting nothing.
Okay, thank you very much. No, you answered me. Thanks, sir.
All right, no problem. Okay, guys, let's take a break, né? And then we can because it looks like these two are the favorites questions. So I'm hoping that here we are then going to then move a bit faster as compared to this one here. But then let's take a break, and then let's take 10 minutes. So let's be back at 2031. So go get a cup of water, a glass of water or a cup of coffee, and then 1:30, or rather 2031, then we then come back and then we continue. Thank you.